Okay, this is John with the Struggling Trader Coach over on YouTube. I'm trying to start a thing. I'm wanting to give trading lessons. I'm not some crazy guru. Really don't have the skills to make a big course and all that stuff. But I'm definitely not wanting to go gimmicky, and I'm definitely not wanting to try to sell you a bunch of crap that doesn't work. I've been trading for about 8 years. 5 of those years it's pretty rough. A lot of trial and error. But what I'm going to do is I'm offering lessons for $30 an hour. They're Zoom lessons, so get my email is tstc at mail.com. That's tstc at mail.com. I'll put it up here. It's $30 an hour, PayPal or Cash App, however you want to do it. And it's over Zoom, just screen share. So if you download Zoom, it's free, and I'll send you the link. You get with me. We'll set up a price. But what I'm going to do in those lessons is I'm going to give before you even pay, I want people to get with me on Zoom, let them see, kind of introduce myself, and let them get a feel for what they're about to get into. And it may or may not be for you, or you may want to work out a different price. If this is too much, we can work something out. I really just want to teach. I'm not really trying to do this for the money, but I've got to make a business out of it to justify the time. What I'm going to do is I do things a lot different. I've had to kind of teach myself how to read charts, and I've been looking at charts for 25 years. Whenever the internet first kicked off, and I could get onto big charts and other different charting platforms or whatever, I was there. And it took me a while to kind of get started to trade. And once I did, I was that's pretty awful. Just like, I guess that's a healthy thing. It's pretty normal. And I'm not an eloquent speaker, guys, so I'm very right-brained. I'm an artist, do other things, but I'm not a verbal master. So please just look through that if you can. Look past that. That's kind of my thing. Is I'm good with visual things, and that really kind of pans out or pays off whenever I'm reading charts. I can really kind of see what's going on. Anyway, and I have a different take on trading and things like that. And I'll try to go through that as best I can. I can't give away everything in just a free YouTube video. Really, to learn to trade, I think it's that you need someone to have a good conversation with, and that's something I never had, and that's part of the reason I'm doing this, is just to find people to talk to who like talking about this stuff, because it's not easy to find people that want to talk about trading and the kind of some of the nitty-gritty details. So whenever you sign up and we get you scheduled and we come on live, this is before you pay. What I'm going to do is I'm going to give you a brief rundown of my approach. And that's what I'm going to do in this video. And I'm not going to reveal everything, but I'm sitting here trying to think how to run through this without being too revealing. But anyway, here we go. We have Thinkorswim, and if you don't use Thinkorswim, that's fine. There's FinViz. You can do a lot of the scans and stuff, and I like I like the charts, but this is scans that I really use it for. And you can chart on a lot of free stuff, and I think Thinkorswim is free. You get a TD Ameritrade account. I think you can put $1 in, open up an account, and you can. Or the thing is, to get Thinkorswim, it's a separate program from TD, though your account data, which is why I'm here on Simulated, your account data is imported, and it's the same password as your TD Ameritrade account. So you have to have a TD Ameritrade account to open up this Thinkorswim. And I was using Scottrade, and I was using their. Actually, my trading got a lot better whenever I had good charting software. That's a real big part of this. And I don't use many. I use one indicator really, and it's down here. It's going to be blurred out, so I'm not going to really go into that until you get signed up. But what I do is come over here to scan. And I'm going to pause the video and I'll be back. Okay, and we're back. I switched over to my actual account, and I've got most things kind of blurred out here. But I run a scan, and I'll run the scan here. And this is it's Sunday afternoon, and it's a fresh scan. But if you're not familiar with TD Ameritrade, Thinkorswim, I can definitely show you how to set up a scan and all that stuff. Okay. And up here, there's different financial criteria that you can set up. And what I'll do is, so I'm running a scan. And the scan itself is is a technical scan. So it's kind of filtering out certain things on the chart. The market's going to be basically in a down condition. And I used to try to filter that up where the market was just in a pullback, but it was a good market. It was really hard to kind of get a good scan. So what I started doing is looking into finding ways to figure out, which companies are doing well financially, that I can then, but that are down, basically, where the price is down. And so that's what I've been doing for a while, and it's been working out quite a bit. So just looking through here, what I'll do is, if I'm trying to add something to a watch list, say, so what I'm going to do is I'm not trying to find a chart to trade today. That's one of the big ideas, and I'll go through that in detail. Is your watch list, and that's going to be probably your most underrated aspect, or it's what I devalued, for a long time. Basically, that's what I kind of. It took me a while to find that value in a watch list. Sure, I had them, but I didn't really understand the significance of it. It took me a while to kind of figure that out. But looking through some of these criteria, okay. me see here. Okay. Rent a center right here. So I found kind of looking at this. Let's go ahead and click on it. And unfortunately, Thinkorswim, you can't just click and you have to kind of RCI, plug in the. Okay, there we go. I'm going to see if, oh, it looks like I've already done some type of analysis on it. Let me clear that. Okay, so these charts, these are long-term charts. These are monthly charts. I even do, I even look at, this is really the bread and butter, is this quarterly chart. That's kind of looking into these things in this long-term chart. That's really the kind of the bread, the meat and potatoes of bread and butter, however you want to do it. So I can look at this and kind of understand what's happening here. And I'm not going to go into that, but it's, so I'm looking at these, looking at what this is doing, and you know, so we're going down, okay? So what I want to do is kind of isolate some of this, push down my time frames. Oh, wait, crap. You know, and I'll even go, I'll go down to the 30. And in this panel, you can, what I like about this, and I'll set up a dual panel. So I'll set up like a weekly and a 30-minute, and those are pretty wide. That way I can kind of tell where I'm at here from this right hand panel. So I'm going to go and start giving some type of structure. You know, this should all be familiar to you, and if it's not, I'm looking for these, where these sellers are coming in. Right here. We know that sellers came in here, and then they came in here. And I'm looking on my indicator here, and it looks like something that I would want to put into a watch list. And I'll try to go into some of the price action that I do without giving away too much. But before I do that, what I'm going to do, I'm going to minimize, and I'm going to go to Yahoo Finance. And what I want to see there, so I want to kind of confirm some of the fundamental analysis. And when I'm doing fundamental analysis, I'm not really looking to be 100% accurate. You know, say you have a metric such as return on equity, that may or may not, the figure that they give may or may not be the actual one, return on equity, but you get a comparison with other companies. Price to earnings, those things, how their standards for Yahoo and Thinkorswim, how these things get published, who really knows, but we can use them as a comparison between other stocks, instead of saying, well, I want my return on equity to be X, Y, and Z, but we can compare the return on equity to, say, some other metrics, and we can say, okay, well, that's showing some debt or whatever. And I'll use this. I'll go to statistics. Okay, so here we have some pretty important numbers. Here is an important number. I'm looking at that. I'm looking at some stuff over here. I'm looking at the revenue. But really, I want to see cash and debt, and you can see that the company is fairly healthy. And something that I will kind of say here is, when it comes to this fundamental analysis and stuff like that, I do like to see a good held by institutions. Okay, and the reason is whenever a company is held by institutions, we're talking about Vanguard, BlackRock, maybe Berkshire Hathaway, big investment firms, big banks, retirement accounts, these things. And those are the institutions. And so what will happen is, as these people have portfolios, and they hold on to things long term. And as this has a good dividend too. And that's kind of a thing. I'll look at dividend. You don't want it to be too high, because that's very suspicious. But a good dividend, that means that we're talking their retirement accounts and things like that, mutual funds that really target these types of instruments, these types of securities. And so we're looking at a pretty good stock here, but it's pushing down, and it's pushed down, and that means it's been sold off. That means that that it's going to be time to purchase at some point. And if the overall economy can have stuff to do with it, but when something's ready, it's ready. And it can, I'm not going to say it'll ignore the economy, but it can. You can have something that is just, it's ready for buyers, and buyers are going to, especially these big guys, they're going to push for these things. They're going to dump into them. They're going to rebalance. They're going to sell off what's. If you don't really know how portfolio rebalancing works, it's something to get into, and I could talk to you about that. I certainly do that, and I kind of do have a thing where I do it within a Roth, and you get what's called a rebalancing effect, where you're kind of generating an actual return just from the rebalancing. And I'll rebalance 50-50 cash, but I don't actually have 50% cash and 50% of stock. It's a theoretical 50%, and it goes into the formula, So I'll hold about 10% cash, and I'll use that to buy and sell as a rebalancing type of. It's a real simple formula here. This growth estimate. This is something that we can talk about, and this is very important. There are price projection models and things like that use portions of this, And you want to see, whenever you see this, you should kind of light up and you should say, well, the people who get paid big dollars to analyze these things and to make projections, they really like this. So you can go to holders. I don't maybe that's not what I wanted. Top institutional holders. Okay, BlackRock, Vanguard. So yeah, these guys are iShares, Russell, Fidelity Valley. Okay, so yeah, this is a this isn't someone's stepchild here. This company Rent-A-Center is somebody's baby that you're dealing with. Okay, and that's important. So how would I do that? I can go here. Where's my grid? Okay, I go to charts. I always forget how to do this. But here's kind of a watch list that I have. I have a couple pages here. Okay. This was on my watch list. This Arm & Hammer, and it's doing well. MSCI, this is one that I actually use in my Roth. It's a very good company, and we've come way down here. Yeti. This is a monthly chart. This is one that I've really been paying attention to, and all these are real sound companies. Adobe, you can see the market's really taken a tumble. Texas Instruments, and here's what a lot of people will come and tell you, especially in these courses, these price action courses and all this crap. They'll come and they'll tell you that, what am I doing here? Okay. CDK, YY, PRDO, Clorox, this is one. Okay. They'll come in and tell you that, say you have a level here, and I'll say, well, it's going to come down and hit that level and bounce off, and that's not what's happening. How do I say it without saying too much? What's going on is it's for whatever reason, we don't know. We're having a sell off, okay, and we're going to come down. Let me go into the bigger chart. Clorox. This is a monthly chart, by the way. Now, you can obviously see that it's pushing up, okay? But the place... Now, did it come and hit a level down here? I mean, it went past this level. Maybe there's some other levels in here, okay? Maybe there's some other ways to see this here. And without giving that away, maybe it hit a level, maybe it didn't. But what did it do? It came down. And now it's going back up. Well, when do we know that? When do we know that it's going back up? It's pretty obvious. It should be. Now here, it came down. Came up and got shot back down. Okay. Wanted to come up here, got shot back down. Same thing here. And this little formation right here, that's very curious. I'll talk about these in whenever you join. All this in here, if it doesn't, it speaks to me. And what's happening here started in here. So, the sellers that are coming into, or they're in this market, eventually your buyers come in and basically slow this thing down, okay, and put it on a type of a curve. And if we do a momentum indicator, and I'll show the momentum indicator I don't personally need this anymore. I used to use this quite a bit, and I don't really need indicators anymore, and I really just use them to do scans. That's really what I like them for, is to do a scan. Okay. If we come in here, and if you don't understand indicators and how they're just mathematical they're just derivatives of the price. Basically, derivative means there's no new information that they provide. It can help you visualize some of this, but you can see here that as we're coming down, right in here, you can see there's a curve. What does that mean? And you see that curve is throughout here. What that basically means is say, for instance, let's do some if then, or some those type of things. So if in this box you had 10 sellers and 1 buyer, okay? And this is what you get. This is the outcome. And then you say, in this box. Hang on, I'm screwing this up. Let me go to weekly and stretch this out a bit. I'm going to push this down. Okay. Say this box, you have a ratio. That's a big word that you don't ever hear about. Ratio. Buyers to sellers, sellers to buyers. But say you have just for instance, you have 10 sellers, 1 buyer. This is what you get. And you may not be able to see what's happening here, okay? And we can go through that, and it's very easy for me to see, but once you see it, you don't unsee it. And that's why I'm hoping with this course or with my lessons, once you know, it's not, there's no rules, there's none of that. You can just see what's going on. And you can make an informed decision, okay? That's really all. It's this whole rules and discipline, it means nothing. Say in this box, now we have, okay, here, I'll just give you a hint. Here we have, say we have 10 sellers, but now we have 4 buyers, okay? And we're getting closer, we're getting tighter. Now here. Now we have 10 sellers, okay? And 6 buyers. Actually, say you have 10 sellers and more like 11 buyers, or 9 buyers, okay? So you have just it. So what we're doing is
basically, as price is still descending, buyers are coming into the market, and they're shifting that ratio ever so closer and closer to the buying side. Okay, and that's where you want to be. You want to be watching those stocks while they're going through that process. Okay. Let's see where was our okay, let me just type it in. Our Rent-A-Center. Okay. So when you're talking about getting in to a trade, you really don't know if it's going to go up or down. You can have there's any rational person can kind of draw a line here, and you pretty much know whenever it starts to go this way, it's going to be going this way. It can pop up and go back. It can do all kind of stuff. You don't really know. But there's a way to attack these type of charts to get you in safely, and you may not want to stay in. You may want to probe the chart and open a position, and watch. Set some criteria. So one of those things that I would do, okay, is I'm waiting for this to come down, and then do something down here. Okay. So we're obviously not buying in an uptrend. We're not waiting for an uptrend. That's if someone tells you to go with the trend, it's ridiculous. It's really what it is. It's absolutely ridiculous, and that's why people really get, in my opinion, that's why they get burned, because they're buying into these trends, and you want to be down south basically whenever you're making your purchases. But you have to understand that we're not feeding off that ego of we're trying to be right, and that's one of those trading psychology things where our ego is pretty much dissolved. We don't have an ego when we're trading. It's not a right and wrong thing. If you can be right or you can be rich, and that's absolutely true, because we're not entering a trade to be right. Is it nice when we're right? Absolutely. But we're definitely trying to stay out of the negative, and we do not want to lose money. That is absolutely crucial. And that's really what I'm trying to get into with people, is show you how not to lose the money. The market will go up. It's you don't have to worry about pushing the market up with your mental abilities or your psychic ability, whatever. It's ridiculous. It's going to go up, but it's also going to go down, and we can control whether or not we're in. And frankly, you just don't want to be in when it's going down. Riding something down, unless it's in a retirement account or something like that, it's a very long term, that's completely different. This formation, this right here, speaks, and I'll kind of show you what's going on there whenever you sign up. But essentially, we're watching here, and it's going to do something down here, and it's going to start going back up. Okay, and who's to say we have to be absolutely right, about the timing? Or who's to say we have to catch this super big move going up? we can still get in and test. Um, we can get in with our stops and we, in the right place, and that's extremely crucial. And doing drilling down on your time frames is kind of essential here. In checking these things out, we have a lot of little tools here. Okay. You see? I have a lot of little ways to kind of get this thing to kind of tell us its secrets. Who's involved and what's going on here. So I'm not going to go into here what I'm seeing exactly and what I'm looking at, but that's what I'm doing is I'm placing something like this on a watch list, and and I'm going to do that right now actually for my own personal gain. And I always mess this up. That's the one thing Thinkorswim, they had. I guess it's a professional type trading platform, and it damn sure feels like it because I don't know what the hell I'm doing half the time. So I'm gonna save this. So if you can't tell, I'm not the smartest cat. So anybody really can do this. It kind of comes down to how much of your ego you want to allow into the circle here, and that's really that's really how you start winning. Is you just start admitting you're wrong. To these trades, to really get them, you really have to come from an area of humility, and you have to understand that you can be wrong about your ideas, and you can be wrong about your direction, of course, and you have to be ready for that. Do I lose trades? Honestly, I don't get into a lot of bad trades anymore. I just don't. But I do hold them for a while. I'll tell you what I'm in now. Not in Corsair, but Corsair has been looking really good to me. That's a really nice one. It's just getting started. Intel looked good. This was on my list. And of course it went up and it's shooting back down. We could have gotten in this and then out without any problems. And that's just the simple truth. Okay. What am I in? I'm in VRTX right now. This is where I got in. This was my initial stop. And I may have reset my stop here. But, these are long-term trades that I'm in. Now, if you want to day trade, and whenever you're coming from this area, these long-term charts, your chances of really making a good day trade, it really goes up. They really do. I'd rather have a piss poor entry into a really good uptrend, long-term uptrend. And I said trend it's different whenever you're day trading. I'd rather have a piss poor entry into a really good spot, basically, than a brilliant entry into just a market that's just it's just not a market that's not conducive to that type of trade. And I guess that comes with experience, and I hope it's not too unfair to you to be too general about that. Here's another trade that I'm in. I got in here. This speaks. And this is what we're doing. And if you would want it to day trade this, for instance, after this entry, okay. We can go through that. I can show you how to do that. If you're in a day, I'm not a day trader, but plain and simple, you have trend lines all through here, okay, and you have other things here. This relationship that I can go into, and I will go into with you, but I'm not going to say it, okay. But look, I mean, this right here, or this. These things are very doable, especially if you're day trading and you're talking a point or two. Get in and get out if you like. Me, I don't really have time for that. I wish I did. Maybe whenever I one day when I retire, whenever I have more screen time. But anyway, that's pretty much it. That's what I do. Is I'm looking at. I'm doing a scan for technical criteria. By technical, I mean just chart stuff. Price up, price down. Then I'm looking at financial stuff, certain financial, and it's very simple. It really is. And I'm using that as a filter to make sure that I'm into something that we have enough interest in to want to, we're not dealing with someone's stepchild, we're dealing with someone's baby, okay? And then from there is where you start to really get into your price action. You start to foment your entries, and and you're watching things, and that's where the price action part comes in, and you're really getting into momentum and things like that, and and I can go into those things. But anyway, let me. It's time. Have a good one. Get with me. Give me a chance. tstc@mail.com. Thank you.